Hey everybody, it's Chip Harris again. Just wanted to get back with you regarding the housing market and the overall economy. Here we are. It is Thursday, August 18th. It's a big news day today. We've been waiting for today. The existing home sales numbers came out from the National Association of Realtors, which, as expected, showed a decline from month to month, from June to July. In terms of existing home sales, we were down between 5 and 6% from June to July, and year over year from July 21 to 22, we're down over 20% in terms of existing home sales. So, if you're a real estate agent, that sounds pretty dire, and it's, nobody likes to lose 20% of their business. However, I'll remind everyone that in reality, 2021 was a real, white rhino type of situation. It just is very unusual and probably a once-in-a-lifetime type of event where home prices are really soaring and sales are still soaring. Just a real unusual situation. So we're really kind of, like I said before, back to pre-pandemic norms in terms of home sales. So that decline year over year of 20%, still not a terrible thing. And if you're a homeowner, the good news is we are still on a national median perspective, over $400,000 on average sale price in real estate. It did actually decline by about $10,000 from the very, very highs of June 2022, just a month ago, or a month and a half ago, to July 2022. The average or median sale price dropped from $413 down to about $403. So interesting news there, but not a significant drop, and it just shows that the market's changing. And if you're a buyer right now, I know rates are a little bit high in the mortgage side compared to the last decade in reality, but from historical perspectives, rates are still pretty good at 5 to 6%. I'll tell you, anybody who's over 40 years of age and either bought a home in the 80s or in the 90s even, some people paid upwards of 18% interest in the 80s for homes. When I started buying homes in the 90s, 8.5%, 8%, great rates at that time. People just have gotten spoiled with the 2.5% to 3.5% rate over the last decade or so. Well, I think we have to get used to a new norm, back to historical average levels. So not a bad thing. Another good thing for buyers is homes are staying on the market a little bit longer. Price reductions of homes that have been listed, probably a little overpriced based on the changing market dynamics that we're in. Prices are coming down. People are doing price reductions to get homes moved. So if you're a buyer, right now is a good time from a negotiation perspective as compared to the last year and a half. And so it's good news all around. If you're a homeowner, your prices and your valuations are staying fairly steady and certainly not dropping significantly. And so that's a great thing. If you're a buyer and homes are sitting on the market a little bit longer and even having some price reductions, it gives you a little bit more negotiating power to get into a home without overpaying and competing with 60 other bids on the house. It's a good time right now for buyers compared to the last year and a half. So other numbers, other economic numbers have come out. Retail sales, consumer retail sales stayed pretty even keeled. It wasn't a terrible decline, not a big escalation. It stayed pretty even keeled, which is great. But I think even more important is jobless claims stayed pretty even keeled too. There wasn't a huge jump in jobless claims. It actually reduced a little bit month over month, but not a whole lot. So pretty even. And as I've always said, and will continue to say, as long as people have jobs and they're working, the housing market will stay supported. As long as people have jobs and they're working and making money, the housing market will stay supported and the economy will stay somewhat healthy. Even though we're in a recession, and we may be in a recession throughout 2023, we just hope it doesn't get tremendously deeper or deep. If jobs hang on, it won't. I mean, if jobs hang on, even with the inflationary pressures and the rate increases and the Fed working really hard to slow the economy down, which is what we're seeing in the housing market right now. It's really affecting the housing market. That slowdown is working. It's what they wanted to have happen. Is even with that going on, if people are working and making money, they'll feel more secure, and I think we'll move past this much quicker. So keep an eye on jobs. As long as they stay elevated and stay pretty steady, then we're in good shape. Until next time, I'll see you later.